Welcome to the Evolution Show. Today I hope to bring some helpful perspectives on why I believe it's game over for most, if not all, traditional automakers. And I will illustrate this by looking at two of the most talked about Chinese EV makers right now, NIO and Xpeng, along with some important milestones for Tesla. I hope to convince you why it's so important to follow the money, not what people say, but what they do, in order to stay ahead of the curve and recognize trends when it comes to investing. And I will do this by looking at NIO and Xpeng and explain what led me to invest in these two hyped Chinese EV companies. And by the end of the video, I'll stick out my neck and share where I see the NIO stock price going, both in the short term and in the long term. And finally, I will talk about something many investors and analysts completely seem to miss. Why it's a big mistake to compare NIO and other upcoming Chinese EV brands with Tesla. So stick around and stay ahead of the curve and stay electric. This is the Evolution Show. Welcome to the Evolution Show. I'm Johan Landgren. For those of you new to the channel, I'm a full-time investor and writer on sustainable energy and electric transports since about 10 years back. I'm also a beekeeper and dedicated to issues related to sustainability. With the Evolution Show, I hope to inspire you and help accelerate a fossil-free transition to combat the climate crisis. Because I believe that with innovative ideas and technology from inspiring people and companies, I really believe we can build something cool and sustainable. So far, we've had many inspiring guests on the show, like Robert Falk, the CEO and founder of Einride, a company that develops a fully electric, self-driving truck that doesn't even have a cabin. And I've also talked with the CFO of Wallenius Marine, that develops the so-called Ocean Bird, the world's largest freight ship that runs almost completely on sails. We've also had Kevin Anderson in the studio, one of the world's leading climate researchers, a person that really tells it like it is. Just to mention a few, and I hope to have many more guests soon. If you like the show, smash that thumbs up button, it really helps the show, and consider subscribing. Okay, so for the last 4 weeks, I've been super busy researching a lot of companies, and I've invested in several new companies, including NIO and Xpeng, and a lot of different so-called EV specs, or what's called special acquisition companies within the EV space. I will tell you more how you can invest in different specs in upcoming episodes. But for now, I highly recommend you check out two of my favorite YouTubers when it comes to looking at different specs and EV companies. Sam with My Financial Friend and Mo with StockMo. I'll provide the links below. And I haven't forgotten, as promised, I will do an episode on solar energy and solar inverters. But I saved this for January, when I have exactly 1 year of data from our solar and battery system. And I think that can be a very interesting episode, learning from a solar energy and battery system here in Northern Europe, in Sweden. So, since about 4 weeks, I started to heavily research NIO, and I also looked at the Chinese EV maker Xpeng. Both are two high-quality Chinese EV makers that has attracted a lot of attention this year. I will focus mostly on NIO today, not to make this too long, but I've invested in Xpeng as well, and I plan to make an in-depth episode on Xpeng soon, and I think both are very great long-term investment opportunities, so stay tuned for that. Today's focus is on two Chinese EV makers, but my first and still biggest long-term EV investment is Tesla, which I started investing in almost 10 years ago, and I drive a Tesla Model S since 2014. Now, talking about Tesla, before we look at NIO and Xpeng, I have to mention 3 recent EV news that signals major change coming to the whole auto market, a disruption happening sooner than I think most people expect. First, we have Tesla, of course, that now finally is being recognized as a major company by qualifying for listing on the S&P 500, a list of some of the most valued companies in the world in terms of market cap. In terms of market valuation, Tesla is now only behind giants such as Apple, Amazon, Microsoft, and Facebook. But this is not only a good sign for Tesla that now is being considered a leader for the future of the auto and energy industry. It also paves the way for other innovative companies, such as other EV startups, that are now raised to the sky as well, simply because they are also providing sustainable solutions for the future. Another related news that really caught my eyes recently is that General Motors, one of the biggest auto manufacturers in the world, suddenly came out and announced that they will launch 30 new EV models by 2025 and invest $27 billion to develop new EVs. At first, it may sound a lot, but when you look closer at the numbers, it really becomes ridiculous. But what is most striking to me is that GM lacks any serious ambitions. The company is only planning to make 1 million EVs annually by 2025. Tesla looks to reach this number already in 2021, and I'm convinced that if GM is to survive as a company, they really have to raise their ambitions a lot. And the third EV news I would like to mention, that is another sign of the demise of the big automakers, came from Daimler recently, or one of its now former executives, René Reif, who went from head of Daimler's production plant in Berlin, Marienfelde, to becoming head of Tesla's Gigafactory that is now under construction outside Berlin. The fun twist in this story is that the German union IG Metall announced that the move was considered a betrayal, not because he moved to get a better job, but because they believed he had information that the Daimler Berlin factory was not doing so well, that it might even be shut down. For me, this is just another sign that working for a dedicated EV company is the future, and working at an old fossil automaker, unfortunately, is soon a thing of the past. Now, China is pumping money into the Chinese EV market, and with new EV and battery factories, it has a huge advantage. But what I think most people haven't understood is that Xpeng and NIO are key players chosen by the Chinese government to lead the EV market domestically and eventually become two global leaders. So what I would like to do today is to look outside the Tesla universe. How can NIO and Xpeng disrupt the global EV market and auto industry? If we look at the world market in terms of electric vehicles sold, 1 in 2 EVs are sold on the Chinese market. There are approximately 340 million vehicles in China today, and 25 million were sold in China in 2019. And according to China Society of Automotive Engineers, it is estimated that China will sell 32 million cars in 2025. And of all these cars, 20% are estimated to be fully electric. This would mean 6.4 million EVs sold in 2025. In China, there are actually hundreds of companies making electric vehicles right now, but most of them you haven't probably even heard of. And by looking at the September number on this graph provided by Clean Technica of the top 20 plug-in vehicles in China, Tesla, with its best-selling EV, the Tesla Model 3, is dominating the deliveries of the Chinese EVs year to date. But in September, a newcomer, Wuling Motors, entered the throne with its new mini EV model, the Wuling Hongguang Mini EV. And suddenly, a new Chinese EV player is coming in as number 1 on the top 10 EV list in China. This new mini EV goes for only $4,200 and can seat up to 4 people and attracts many people in the urban areas in China. When removing these hybrids, since we focus on fully electric vehicles here, NIO with its ES6 model, a SUV, and Xpeng's new sedan, the Xpeng P7, puts NIO and Xpeng on place 8 and 9 among the top 10 fully electric EV bestsellers in China in September. Now, if we look at the best-selling fully electric EVs on the Chinese market so far, from January to September this year, we see that Tesla is the obvious leader with more than 82,000 Tesla Model 3 deliveries so far this year. But again, we can see that things move very fast on the Chinese EV market. The newcomer Wuling Hongguan Mini EV can definitely continue to grow on the Chinese EV market. We also notice that BYD is China's biggest EV maker by far, with 5 different fully electric EVs on the top 20 list. But let's take a step outside the Tesla universe and look at NIO and Xpeng and how they can disrupt the global EV market and auto industry. NIO was founded in 2014 by the entrepreneur and billionaire Li Bin, or William Li. The first couple of years for NIO was quite challenging, but after its IPO on the New York Stock Exchange in 2018, NIO is now making 3 different fully electric SUVs and 1 super sports car, and is expected to start producing a 4-seated sedan in early 2020. There were several things that made me interested in NIO. One was its business model, offering rental of its batteries to keep down the price of buying the EVs. Instead, you can pay a monthly fee for the batteries. This idea is of course not new, but NIO's combination with its more than 150 battery swapping stations in China really stands out. This makes it possible to charge your NIO in 3 minutes, faster than at the gas station, which is very attractive in China, making it easy and convenient to charge. I believe that many are attracted to NIO because of this business model. And I also believe that this model is a way for NIO to buy time until a regular supercharging infrastructure is in place in China, which takes time. At the same time, I realize that battery swapping stations probably won't make any economic sense in Europe and the United States. But right now, that really doesn't matter, because China is the biggest auto market by far, and NIO will focus on China in the next couple of years. But what really made me realize the potential of NIO was when I learned of the build quality in their cars. In fact, NIO's EV models are even compared to Mercedes and BMW, and this is a game changer for the whole Chinese EV market, and I will now come back to why. When you're evaluating disruptive companies, look where they are going, not where they have been or where they stand today. I believe that what we're witnessing here is a game changer in terms of manufacturing quality coming out from China. And NIO and Xpeng are 2 really good examples of this, being the 2 first high-quality EV makers in China to be able to enter Europe and United States, thanks to superior EV quality and low price compared to traditional automakers. And just as many underestimated Tesla early on, many still underestimate new companies' innovative abilities and potential for growth for the future. And here I see the mistake being repeated with NIO and Xpeng. The Chinese government is heavily invested in domestic EV leaders. And NIO and Xpeng are too important for China to fail, because I believe it's all about national pride and long-term investments to become dominant in the EV market. And this is more important to the Chinese government than short-term funding or even lack of profit. For a long time, we've been used to traditional automakers like Volkswagen, General Motors, BMW, and Daimler, companies that have lived on a reputation of superior build quality and brands compared to the Chinese auto industry. But with the electric transition, it takes a lot of money and new technical innovation, and indeed, access to batteries. And here China has a leading position. And now enter NIO and Xpeng that suddenly comes out with high build quality that can match and even outmatch traditional automakers. This is a game changer most haven't understood. So who is betting on NIO right now? Let's look at the biggest shareholders in NIO and what they have been doing lately, and then compare NIO and Xpeng's latest earnings reports to get an understanding of their financial situation going forward. Let's look at the 6 biggest institutional shareholders in NIO that hold 56.3% of the company. Tencent is holding 10% of the company. Original Wish is holding approximately 14.3% of the company, and the CEO of NIO, Li Bin, is holding approximately 14% of the company. Then we have Baillie Gifford and Company holding about 10%, and BlackRock with 5%, and Vanguard with about 3%. But the biggest shareholder in NIO is actually the government of Hefei, capital in China's Anhui province, because in February, NIO was saved from bankruptcy by the government of Hefei and received $1.4 billion in funding. And this saved the company and made the state owner Hesai Investor Group the biggest shareholder. So if we add the government of Hefei with the 6 biggest institutional shareholders in NIO, we have more than 80% of the shareholders in the company. Everything from new investors to more experienced ones can panic when they see big news selling the stock. Let's take an example. Citron Research, famous for shorting different stocks, came out November 13th with a price target of $25 on NIO, comparing with Tesla and BYD, and recommended to pull the plug. The same day, we can find with data from Fintel.io that Morgan Stanley dumped almost 50% of its NIO holdings, more than 4 million shares. The same day, Goldman Sachs did the same, with approximately 3.6 million shares, or selling 29% of their NIO position in one day. And Credit Suisse sold about 2 million shares, or 20% of the bank's NIO holdings. And Norges Bank, Norwegian bank, sold 90%, or about 2 million shares in NIO. A lot of people are panicking. A lot of small-time investors, and I would say a lot of unexperienced investors, are selling their shares, instead of focusing on what the big institutional investors are doing. So what are the big institutional investors doing in NIO? If you look at the same day as Morgan Stanley and Goldman Sachs and others were selling, Renaissance Technologies were buying 4.6 million shares, or increased their holding by 50%, and Carmignac were also increasing with 6 million shares, or a whopping 108% increase of their holdings. And Bank of America were also increasing. And 3 days later, Vanguard Group, one of the biggest shareholders in NIO, were also increasing with 5.3 million shares, or about 19% of their holdings. Now, only 1 day before Morgan Stanley, Goldman Sachs and the others came out and sold a lot of their shares, Baillie Gifford, another of the biggest shareholders in NIO, were adding a whopping 11 million shares, now having 109 million shares in NIO, or about 10% of the company. And what did they do the same day as Morgan Stanley and Goldman Sachs were selling? Well, nothing. They were holding their shares because they are long-term investors. Another long-term investor in NIO is BlackRock. 1 week before Morgan Stanley and Goldman Sachs were selling their shares, they invested 10.2 million shares, and by doing so increased their holding by about 24%. And they, just like Baillie and Gifford, were holding on to their shares when Morgan Stanley and Goldman Sachs and others were selling November 13th. So what is the lesson of this? When you see a huge sell-off in a stock you're holding, look at what the long-term investors, the biggest institutional investors, are doing. Are they also selling? Has something fundamentally changed with the company or the overall market that makes you question the investment? Or is it something else at play? If nothing has changed, try to remain calm and don't panic. You might even find a new investment opportunity to add more shares following a small or even bigger sell-off in the stock. Let's look at NIO's Q3 earnings report to get an overall financial picture of the company now and going forward, to see if we can expect NIO to fund or get funding for the construction of a new factory, for example. If we look at the latest Q3 earnings report from NIO, we can find some really interesting numbers. A key metric to look at is the vehicle deliveries, and from Q2 to Q3 we can see an increase by NIO with more than 20%, delivering 12,206 vehicles in Q3. The company is looking forward to the Q4 and estimates deliveries of 16,500 up to 70,000 vehicles. And this resembles an increase by 35 to 39%. And if we look at the vehicle margins for NIO during Q3, they also increased. And we can see that it increased from just under 10% to 14.5%. And this is a very important number to look at. How much money can they actually make from making the vehicles? Now turning to the total revenue, we can see that it increased from about $526 million in Q2 to $666.6 in Q3. And NIO's own estimate of the total revenue in Q4 is about $921 million, or up to $947.9 million. I also looked at cash versus outstanding debt. We can see that in Q3, the cash was about $2.8 billion and that the liabilities was about $1.6 billion. This is a good sign. You need to have cash. Now, let's turn and look at Xpeng or Xpeng and its latest Q3 earnings report. If we start with the vehicle deliveries, we can see that in Q2, Xpeng or Xpeng was producing about 3,000 vehicles. And in Q3, it more than doubled. And this has to do with their new production in their own factory. They're ramping up at the early stage. And this means that the jump can be incredible in the beginning. And you can understand this by looking at Q4, when Xpeng is estimating to produce 10,000 vehicles, which is 16.5% increase from Q3. And the jump is not as big as between Q2 and Q3, because now the ramping of the production is increasing more slowly. And if we look at the vehicle margins in Q3, for the first time, Xpeng is actually making money from producing their vehicles. In Q2, they were actually losing money for each vehicle they produced. And in terms of revenue, Xpeng actually doubled its revenue from Q2 to Q3. The revenue in Q3 was $293.1 million. And Xpeng's own estimate for the total revenue in Q4 is about $335 million. And finally, Xpeng's cash versus outstanding debt in Q3. In Q3, Xpeng's cash was about $1.8 billion, and its debt or liabilities was about $873 million. This is also a good sign for Xpeng. NIO, in their forward-looking statement, estimate 16,500 to 70,000 vehicle deliveries for Q4. Since we already have the numbers for October and November, we can estimate the December number. What I've done is to basically double the increase we saw between October and November to come up with the December number, which for me should be about 5,700 vehicles, resulting in just above 16,000 vehicles for Q4. I know that Q4 can be a surprise, but I think it would be very difficult to reach more than 16,500 that NIO was hoping for. But if we look forward, what is more important is the physical limits to grow within NIO's factory. But here it looks quite good, at least for now. Because according to William Lee, the founder and chairman of the board at NIO, said during the Q2 earnings call that, quote, "Without significant investment, we should be able to increase the production capacity of our current plant to 150,000 units under 2 shifts," end quote. And this is a really good sign and will mean room for growth enough for at least next year, I think. So let's say that NIO have at least 15 months before it hits its production capacity limit in its G8C plant. Signs of a new NIO factory is something to look for in the next couple of months, and I would not be surprised to hear about it by the end of this year or in the early 2021. But this begs the question, how fast can NIO build a new factory? Well, if we look at Xpeng, they built a new EV factory from scratch in only 15 months, so why would NIO not be able to do the same? I don't think NIO will have any problem taking a loan of a couple of billion US from Chinese banks. And now it's also a good time to issue new shares. With its current market cap of about $70 billion, NIO could issue shares worth about $2 billion, and it would only dilute the shares with about 3%. So where do I see NIO's stock price going from here, both in the short term and in the long term? NIO's stock price has gained more than 11.5 times year to date. But I believe this is only the beginning for NIO's stock price. If we start with my short-term prediction for NIO's stock price, I see NIO reaching $70 to $90 per share following the release of the Q1 earnings report 2021. Some of the triggers I see in the short term is triggered by the continued growth in vehicle margins, vehicle production, and increased revenues, and yes, of course, the upcoming NIO Day, January 9th, 2021. In the medium term, I see NIO reaching between $150 to $180 per share by Q1 2022. And for what I call the long-term prediction, I see NIO's stock price reaching $400 per share by Q1 in 2023. Many of you probably think I'm totally crazy with these predictions. Tell me what you think in the comments below. How about Xpeng's stock price then? Well, Xpeng had its IPO in August, and since then the stock price has been up more than 300%. And I expect more with its exponential growth in the company. So where do I see Xpeng's stock price, both in the short term and in the long term? I will save that as a cliffhanger for a separate episode when I look closer at Xpeng. I'm very aware that I probably will have to update my predictions as things move very fast in the EV markets. And remember, these are only my personal opinions. Always do your own research and manage your own risk before making any investment decisions. Here are some key points I hope you find helpful when you look at future investments, or if you look at investing in NIO, Xpeng, or Tesla. Comparing Chinese EV makers to Tesla's valuation, past and present, is a big mistake. The EV market in China is big enough for many Chinese EV makers and for Tesla. And the global market for EVs is likely to be dominated by Chinese EV makers and Tesla. Others are simply too slow and far behind. For me, despite the exponential stock rise we have seen year to date, NIO, Xpeng, and the Chinese EV market is a long-term investment opportunity. NIO and Xpeng both are quality EV makers with a strong support from the Chinese government, and this is key going forward. But of course, never place all eggs in one basket, and everybody's risk management and portfolio is different. But I invest in NIO and Xpeng and Tesla, expecting a 5 to 10x return in the next 3 to 5 years. Share your thoughts and ideas in the comments below. And if you like the show, smash the thumbs up button. It really helps the show. And consider subscribing. In about a week, I'll be back with a really exciting episode on why I invested in Einride, a Swedish startup that has developed the first self-driving heavy electric truck that doesn't even have a cabin. Einride's trucks are already in operations in Sweden, and recently Einride's self-driving electric truck made a record driving on the Top Gear's track at Dunfolds Aerodrome in Surrey, England. I hope to see you then.